You can join the legions now and play the sport on the field and be the ones to figure out the plays, or you can keep watching from the stands as a spectator.
What is tokenization of real estate assets?
Real estate is primarily an illiquid asset. What does that mean? So what tokenization allows us to do is to make that illiquid asset into a liquid asset.
There's been some tangible results, right?
Right.
From real estate asset tokenization.
It's liquidity. It's democratization of access to assets, to certain properties. There are ways we can innovate and make this more accessible. We could have avoided that entire systemic risk.
All right, let's go. Hello, everyone. This is Tanveer, and I'm really excited to bring to you the third episode of our talk show, Tokenize Tomorrow, co-hosted with Roop Singh. I'll introduce Roop in a minute. A little bit about myself. I run an entity called Token Expo, through which we evangelize asset tokenization. We cover some of the most compelling use cases across 7 or 8 different industries, mostly capital markets, real estate, supply chain, healthcare, professional sports, green energy, and other areas such as trading in precious metals or art, etc. And we host exciting events, both in person and hybrid. Our most recent event was in San Francisco, Token Expo SF in May. We'll be back doing that again February of next year. And on November 22nd, we'll be doing an online, which is episode 4, I believe. And we'll be announcing that. And with that, I want to introduce Roop. Roop is a technologist who specialized in blockchain technology over the last 5 or 6 years. He's authored books. He's a highly sought-after speaker. He's spoken at least a couple of times on the TEDx platform. And his on YouTube, over 500,000 people have watched his videos. Over the last few years, he's developed a very exciting course on blockchain for business. It's a strategy course called Blockchain Strategy for Business, a comprehensive course. And to date, hundreds of executives and mid-level managers have attended his course or his consulting engagements. So he's consulted both with large enterprise as well as mid-market customers. Roop has spent many years in Atlanta. Now he travels all over the world, enjoying his stuff. So Roop, welcome back to episode 3. Today we're going to talk about real estate. Our episode 1, we spoke about a lot of what's happening on the political front and the regulatory stuff and all of that, what to expect with elections around the corner. In episode 2, we spoke about why any asset-heavy organization must consider tokenization. We did talk a little bit about real estate in that episode. It was a great episode. I thought, today we'll talk purely about real estate asset tokenization, the good, the bad, and ugly. So, Roop, really excited about you joining me. How you doing?
Good. Thank you for having me. It's a pleasure. And thanks again for that kind introduction.
No, it's my pleasure. I've been looking forward, to this talk group. Now, for the benefit of the folks who may not be too familiar with tokenization or real estate asset tokenization, could you, set the stage and tell the audience, right? What is tokenization for real estate assets, and why do you think it's compelling?
Right. So before we get into that, just a quick clarification. My book has not been published yet. It is about to be published, so we will keep everybody updated when that is out, just to be accurate. So let's get into this. What is tokenization? At the end, it is a very basic fundamental idea. Let's go back in history and look at how we tracked assets. So I mentioned this in one of my TEDx talks as well. One of the earliest record of assets as a society, as a collective, was the formation of Amsterdam Stock Exchange. So at that time, companies got together. I'll skip the long version of the history. Companies got together and said, we want to give a share of the company to investors. Investors can pay money, buy the share, and when they want to get some liquidity, they can sell the share to a willing buyer. So for that, we needed three things. We needed an asset, which was the share of the company in this case, but fundamentally we need an underlying asset that is considered valuable. Second thing is we needed a mechanism to record the ownership, and hence that became at that time a ledger which was on a technology that was developed 2,500 or so years ago called papyrus, otherwise known as paper. So we started writing these things in paper ledgers. What is the asset? Who is the owner? Who is the buyer? And who's the seller? And the third thing we needed to enable this entire exchange was a marketplace where buyers and sellers could meet and discover a price of the said asset. Given these three fundamental attributes, you could create a market for valuable assets and track their ownership, right? So now all we're talking about is taking these three elements digital. Primarily the asset. The asset needs to be digitized. And we will talk about real estate in a second, which is essentially physical asset that you see it, or in other words, called real world asset, which is somewhat of a misnomer, implying that other assets are not real world. But anyhow, that's the name media has chosen. So a physical real estate asset is now converted into a digital twin. And then it is recorded into a digital distributed ledger, DLT, also called a blockchain. So all we have done is move the registry of the asset from a paper ledger to a blockchain-based ledger. And then the third element is the marketplace. The marketplace, in this case, would be the primary marketplace to issue such an asset, and then a secondary marketplace to trade this asset between buyers and sellers so that they can discover a price and exchange the asset. And then we can transfer the ownership of the asset from the seller to the buyer. Does that make sense?
No, it does. And I liked how you use history to explain this, right? Now, second part of the question was that why does this, why should anyone care, right? What's the compelling case for this?
Yeah. So the short answer is this. Real estate is primarily an illiquid asset. What does that mean? Let's talk in practical terms. Land is a foundational asset that has created our civilization globally, right? The ownership of land allowed us to create generational wealth. And then from the ownership of land came the ownership of physical buildings. And that's what we're really talking about here. So once you buy a building, a house, an office, whatever the case is, a hotel, till you sell the entire asset to somebody else, your value within that asset is locked. It is not liquid. You cannot use that value. It may appreciate or it may depreciate depending on the market forces, but whatever the case is, the asset itself is not liquid. So what tokenization allows us to do is to make that illiquid asset into a liquid asset. What does that mean? That means let's take a property, and there are different types of properties. Could be a rental apartment building, could be a shopping mall, could be a commercial office building, could be a luxury hotel, could be a heritage site, you name it, anything physical that you see. Now, let's generate tokens, which are essentially shares of ownership of that particular asset. And then let's enable a marketplace for buyers to buy those shares. And this is what it enables. It enables liquidity, because now you can buy portion or fractionalization of the physical asset. And you can also invest in this particular asset with small amounts of money, much smaller than what it would take for you to buy the entire thing. Well, in a little bit, we'll look at a few examples. So let's say a hotel is worth $100 million, but you only have $50 to invest. In traditional terms, in today's world, or I should say in the previous world, pre-tokenization world, that asset was not accessible to that level of investor, that type of investor. But now it is. That's one aspect. The other aspect is, and I'll go back again a little bit in my journey. See, when I started learning about blockchain, and when I started professionally getting into it, let's say 2015, 16, 17, I came from the world of business process automation. So I looked at blockchain as an effective tool for business process automation. So what does that mean? That means in today's world, or in the pre-tokenization world, there are a lot of inefficiencies in the process of registering a real estate property and then enabling the price discovery of it, and then purchasing, selling, and buying of that property. There are a lot of inefficiencies depending on which jurisdiction you go around the world, and all those processes are essentially paper-based processes, even today. Or maybe they're slightly more advanced into database-based processes, but still a lot of paper is involved. So if you think about automating that entire end-to-end process, tokenization is another name for that efficiency. So to me, what Tokenized does is gives you efficiency in the end-to-end process of registering a property and buying and selling of that property, and then discovering the price and transferring that ownership, which is a cycle that continues on, hence the market. So it is just a more efficient marketplace and a more efficient and a registry mechanism than what we have in the pre-tokenization. So that itself unlocks a lot of opportunities for different type of participants, be it an investor, be it the issuer, be it the asset holder, even the stakeholders like the government.
No, this is beautiful. Now, this is no different than, for example, a big publicly traded company like Apple or Nvidia, right, where someone can go on Robinhood and buy one share or a fraction of a share, right? And so that's what, at the end of the day, that's where the industry has been thinking, right? To make it to a point where anybody could buy a piece of real estate anywhere.
Yeah, I like the way you think. That's a bold vision and a bold claim. Anybody could buy a share of any property anywhere. Now, these are three major targets you set. So I would love to get to that world. So I think we're moving from a world of pre-tokenization into that vision that you set for us just now.
Or even if it's not anywhere, but someone in California could buy a piece of Manhattan real estate, right? As things mature.
Right. And that has happened. We have a few examples today that demonstrate the potential, and not just the potential, the effectiveness of how this can be done.
And that's a beautiful segue to my next question is if we can talk about a couple of success stories where there's been some tangible results, right?
Right.
From real estate asset tokenization.
Right. So I have quite a few of those for you. Depends on which region we want to focus on. So let me tell you the one that I spoke about in my TEDx talk. Let's start with that because I think it's still the most famous and most interesting of use cases, which is the Aspen digital token out of the St. region in Aspen. So the year was 2018. Now that's 6 years ago, right? We're 6 years from that. We're not talking today. And it was in Aspen, Colorado. And what they did is they tokenized the St. Regis Aspen Hotel, and it was done by a platform called Indiegogo, and they issued a security token offering. And by doing that, the the digital token was backed by the resort's equity, and only accredited investors were able to buy it because it was deemed a security, and rightly so. And within the jurisdiction of the United States, that's how the regulatory framework is set up. And accredited investors were able to buy small fractions of the property via a blockchain token. What this did is that allowed real estate investors to come from a broad type of investors. It could be retail, small value investors, or it could be institutional investors. And it showed that we could democratize an iconic hotel, an iconic property, and give access to the high-end properties, which was very limited or hardly even there for certain type of investors, right? So this became an important case and an important precedent in how real estate tokenization can open opportunities. Now let's look at a couple of other cases around the world. Let's go to Asia. So Labs Group in Asia Pacific in the year 2021, they tokenized different sets of properties such as hotels, resorts, and residential units in Asia, in Thailand, and in Indonesia. And what they did is something similar, that retail investors could purchase small fractions of real estate properties in these regions. Let's look at another one. This is in Zurich, in Switzerland, one of the leading places for such experiments. In one of the largest tokenized real estate transactions in Europe, Brickmark purchased in 2020 a building in one of the most expensive shopping streets in Zurich, using a combination of traditional currency and digital tokens. They tokenized about $134 million worth of building's equity and offered it to investors. The deal was groundbreaking in Europe. So again, it showed the promise and potential of tokenizing a commercial real estate property, right? Now let's look at another one back in the United States, Mercedes House. This was in Manhattan, so in New York. Red Swan, a commercial real estate tokenization platform, tokenized parts of the Mercedes House, a luxury residential complex in Manhattan. They offered $30 million worth of tokenized equity to accredited investors, and this allowed fractional ownership and fractional stake in prime New York City property, which is typically out of reach for smaller investors. So you see a trend here. Let's go to Asia again, to South Korea, in the blockchain village. There was a project in 2021 called Casa Korea, a platform in partnership with the government. Notice that. It is in partnership with the government. Created a pilot for tokenizing real estate in Seoul's blockchain village. Casa Korea tokenized ownership in small office buildings, allowing everyday citizens to invest in real estate through digital tokens. And it was one of the early government-backed initiatives in Asia, highlighting the integration of real estate tokenization into mainstream economic policies. Just quite interesting. So let's look at another one in the UK. It's called the Property Token in Manchester, UK. In 2020, in a pioneering move for UK real estate market, Property Token launched a project that allowed investors to purchase fractional shares in a commercial building in Manchester. By utilizing blockchain, investor could buy, trade shares in property, creating a new way for small mid-tier investors to get involved in commercial real estate without needing large amounts of capital. And the impact was enormous. So these are a number of examples across the world to show you not only can this be done, but this has been done. Does that help?
This is exciting, but there's also a concern, right? Exciting overall. If you look at it globally, there seems to be a lot that's happening. But in the United States, and I think it's a lot to do with regulatory compliance and all of that, and hopefully we'll address that to a large extent. Perhaps not so much. But before we go to the regulatory compliance part, we're definitely seeing an increased interest, for fractionalization, for tokenization. So I want to get your thoughts on how is tokenization facilitating this, and and how is it impacting the traditional, real estate investment models, right?
Yeah. So the answer to this starts and ends with regulatory framework. So let's put that aside so that we can focus on that in a little bit. But in terms of traditional investors, if you look at the recent BlackRock fund for tokenized assets, for tokenized real estate, they partnered with Securitized, a tokenization platform, which gives you the technology for it. And then BlackRock became the asset manager for it. And that's not that old of an example, depending on when you're listening to this. So to me, that's a very exciting development, that such a large asset manager would put their efforts and their credibility behind it, right? And in some ways, that's what we need. We need institutional investors to show that the technology has been there for a while. It's just the question of market adoption and the question of regulatory legal framework. So the more efforts we can put in that aspect and create momentum there, the game will change. At this stage, you might say, well, traditional developers don't care about this. And maybe they don't, but they should. Because these are new territories. These are new territories that will create disruption. And one of the things I look for, this is my lens for traditional markets of different kinds, but specifically in real estate. One of the reasons that traditional asset managers of real estate have been shying away from this is that it disrupts their current business process. See, people have been doing this across jurisdictions, across countries. People have been buying and selling real estate for generations, for centuries. It's not a new game, And in a very similar way, in terms of what the process involves, over the last, 50, 60, maybe 100 years, it hasn't changed much. So people are used to that. And what they're also used to is market participants, meaning there are different players involved. Some of them add value, some of them aren't necessarily add value. And to me, that's a broken process. But it's a process people are comfortable with and used to. And anytime we have to change, we as humans, as society, we have challenges with that. I'll give you another example since you like history. When coffee came into Europe early on, it was actually not very well accepted or adopted. People would not drink coffee. It was considered the drink of the devil. It will make you crazy or something. And then it took clergy, literally the Pope had to sanction coffee as a legitimate drink to use in everyday life. And that's what generated the adoption of coffee. And look at us now. There is, a coffee shop every third street, wherever, in every big city you go. So we as humans don't like change, and we don't like to change the processes that we're used to, we're comfortable with. And a lot of this has to not do with technology, but to do with human inertia to change.
Very nicely put there, Roop. I appreciate that. Now let's talk a little bit about the Gartner cycle. I think it's very interesting how they've laid out, right? Any new technology comes in, there is that euphoria and there's this inflated expectation. Then there is, disappointment and there's disillusionment, and you hit rock bottom. After which, there is some maturity, and then you start seeing actual productivity. Specifically around tokenization, right? Any thoughts on where do you think we are, in that whole Gartner hype cycle?
Yeah. So it's interesting that you bring up Gartner at this stage of the discussion. So, like I just said, the inertia is in human change and not in the technology. So the way I look at the Gartner cycle, if you have to superimpose the cycle on blockchain, that would not be an accurate description, because blockchain is a foundational technology. The way I look at it is, how are these markets developing across jurisdictions? What I mean by that is, You could tokenize real estate in New York, in Florida, or in San Francisco. You are within the United States. You go to Dubai in UAE, you go to Singapore, you go to Japan, you go to Switzerland, you go to Korea, you go to Thailand. Those are its own markets. So you have to look at the hype cycle for each market because it's not determined by the technology. It's determined by regulatory legal framework, institutional investors backing the project, and institutional issuers, the ones that own the asset, deciding to tokenize the property because they believe that there will be market adoption and they could get more investors. Right? That's the only purpose for them to do it. So when you look at these factors, what you see is different curves for each market. So generally speaking, I can say that the jurisdictions that have a clear, specific, comprehensive framework, legal regulatory framework for tokenization of real estate assets as securities are higher up in the cycle. They have come out of the disillusionment and the heightened expectations, and they are normalizing now, right? They're looking at this as a realistic opportunity. The jurisdictions which have not yet developed a specific digital assets securitization framework are still in the era of disillusionment and in the trough of disillusionment. And I would count the United States in that category. There have been few projects in the United States that have not taken off in real estate tokenization because of the fear of investors and legitimate fear and legitimate risk of what might happen to their investment if we cannot answer categorically this one question: is it a security or not? Right? And I think it's up to our leadership in the United States and our lawmakers to figure that out. And I think the industry has been asking that for a while, and their stance has been, well, we still have these old laws, you need to comply with old laws. Well, if that was the case, why did these other jurisdictions like Singapore, like Germany, like UAE, like Liechtenstein, like Switzerland have developed specific new frameworks for electronic digital securities? I'll just leave you with that thought.
No, this is nice. I'm very tempted to ask you. Yes, I'm concerned about the U.S. too, right? And for too long we had this St. Regis story, right? The success story that you mentioned at St. Regis, right? But a lot have popped up in other parts of the world. This may be a little harder question, but if you had to pick the three markets that you think have made the most progress, I think you probably mentioned a couple when you mentioned Singapore and Dubai. But what would be your three markets that have really taken off, right?
Yeah. So before I answer this question, and maybe we should have said this early on as a disclaimer, whatever we are discussing is not investment advice or financial advice. I'm a technologist, not a financial advisor. So from a technology strategy standpoint, I'm discussing these markets and should not be taken as financial or legal advice. Now, having said that, I mentioned the three markets. To me, it is Dubai, Singapore, and Switzerland. Switzerland being the oldest, Dubai being the most, let's call it government-backed, right, and most positive investor attitude, and Singapore being the most, I would say, advanced in experimentation and testing. Singapore Monetary Authority has passed a few laws around the subject, and they have a sandbox that people can do experimentation in, and they have been very open to these innovations. And you can imagine, I mean, Singapore is really a city state if you think about it. It's not that big of an area. They're running out of land, so they have to build vertical. They just have to keep going higher, and they have to figure out new innovations to capture that demand and to marry investors to a particular asset and a demand. So that market is evolving, right? So these are the three markets that I would say have done the best. Now, I will repeat it again. if you look under the hood, their technology solutions are not so different. The architecture of a ledger and the architecture of enabling this token is not very different what we might use in the United States or in Europe. So then what is different? The difference is they have gone to their grassroots. Like in the case of Dubai, for example, they have digitized their entire real estate end-to-end process, and they have now created a blockchain-based registry for all their real estate. I will repeat that again. So going back to the first discussion, blockchain is essentially a ledger. It's a record-keeping ledger. And it can keep a record of anything. In this case, the asset called real estate. Dubai, UAE, have specifically transformed their business process to record the ownership and the issuance of a digital certificate for the ownership of a property. They've gone to their grassroots. And then they have enabled secondary marketplaces where these digital tokens can be traded, and that is what unlocks liquidity. Unless you enable these two ends, grassroots record of the original asset, and then trading, buying and selling and discovery of price in a neutral marketplace to enable liquidity, you couldn't possibly create a market. And they have designed laws to create that infrastructure and to create and I would say even in public statements, if you look across these three jurisdictions we mentioned, they're pro-innovation and they're pro-blockchain, pro-tokenization, and even there in their public statements, they have engendered a fertile landscape, a fertile field for people all over the world to come and play in these sandboxes.
Very cool. Yeah, and I hope the United States also starts playing catch up. Sometimes that does worry me. Now we'll switch to see what is driving some of this, right? Like, what are some of the trends that have emerged in this space, and how do you anticipate these trends evolving over the next few years, Roop?
Yeah, I mean, we've covered quite a bit of that. So just to summarize, it's liquidity, it's democratization of access to assets, to certain properties. From an investor standpoint, it is also a way to broaden the investor base. So let's say your property is a certain value and it's only available to a certain category of investors, and that's not a bigger pool in your area. So you're very limited in how and where and to who you can sell that property. But if you broaden the base, you have institutional investors who can easily buy tokens and retail investors who can buy on small amounts. And then as an issuer, you think of what rights you could include, right? Let's take an example of a heritage building. Let's say the Taj Mahal in India, or the Red Fort, or the Eiffel Tower, or the Statue of Liberty, you name it, anywhere in the world. Let's say this is slightly different from just real estate investing, but let's say that these historical heritage buildings need renovation every 10 years, and there's a cost to that. But they also have significance in history and personal significance for people of that country who live there. Or perhaps they don't live there, but they want to feel that attachment to their motherland. So there's a possibility, let's say the Eiffel Tower or the Statue of Liberty, we issue tokens for that and people can buy it. And with those investments, we can define what the rights of the token holders are. The issuer can define. And that's the big thing. It's programmable at the end of the day. You can, in the case of Statue of Liberty, let's say we define, well, you will be able to bring your family 4 times a year to the Statue of Liberty, free entry, and when you come, you get a little gift bag, and you get your picture as an asset owner of the Statue of Liberty. Well, that's cool. I want that. So maybe I'll invest $100, $500, $1,000, and I want to give back to my community. I want to support this initiative, right? So I want to support the preservation of history. So I'll support that initiative for generations to come. So in that way, I can even pass that on to the next generation, this digital certificate, right? So what I'm saying is there are ways we can innovate and make this more accessible. So I think that trend should evolve further, right? So going back to your question, to me, these are the drivers: accessibility, democratization, liquidity, broadening of investor base, right? If you're curious, I'll give you another interesting example from our recent history. Back in 2008 economic crash. No, sorry, not that one. When was the subprime crash that happened in United States?
2008, well, right? The mortgage crash was 2008 and 9. Yeah.
Right. So if you're curious, with your permission, let's discuss that.
Absolutely.
So if you remember about the mortgage crash, it was basically a subprime mortgage crash, right? So if you've seen that movie, what is it called? Big Short?
Yes.
Right? They go through a lot of reasons behind it. So there were a number of reasons that led to that crash. We won't cover everything. But there were a couple of things that I believe, and proponents of this technology and this movement believe, that could have been actually avoided, and we could have avoided that entire systemic risk if the underlying asset was digitized and there was transparency in what the underlying asset was. See, one of the things, if you watch the movie The Big Short, you'll see that people were buying packages, meaning companies, institutionals were buying packages of these mortgages without really understanding what is contained in the underlying asset, right? And the risk was over leveraged, so to say. So the point becomes at the atomic level, at the basic foundational level, what is the asset, and is it a worthy asset or not? And we could do that with tokenization. It would require a lot more digitization, and it would require us to be more transparent, and it would enable us to not have all these fraudulent and almost sales of properties or mortgages where people couldn't really afford it. And then it would create this layer of transparency. When you package the asset, you could literally go a few clicks down, drill down, and see what the underlying asset was. And I believe that could have actually stopped, or at least slowed down, and gave a pause to this whole subprime mortgage crash. So to me, these are the drivers, generally speaking.
Now, you, in your consulting work or in the training programs that you offer, right? You've spoken to a bunch of executives, even at the C level, right? On how they could, get more value by leveraging blockchain technology, and get more strategic with this, right? If you were at a large real estate conference, right, and you were asked to provide some advice, to traditional real estate asset owners who own large pieces of real estate or manage, assets, large or mid-size, what advice would you give these folks?
So I usually end my talks with this. If you look at a sport, let's say NFL or cricket or soccer, whatever your choice. Imagine a stadium, a large stadium, thousands of people watching the sport. There is, 8 or 11 players on the field playing the sport, and there is maybe 30, 40, 50,000 watching the sport in the stadium. So just have that visual. Players on the field and spectators watching from the top. So the question I have for these real estate asset owners is, do you want to be a player or do you want to be a spectator? It's a simple choice. The wall doesn't wait for anybody, and innovation certainly doesn't, and disruption further doesn't wait for anybody. Disruption is going to happen. It's inevitable. It's the question of when and not if. You can join the legions now and play the sport on the field and be the ones to figure out the plays, or you can keep watching from the stands as a spectator. That's my advice.
What is the barrier right now, right? What do you think is the barrier or, that's stopping these folks from, making the plunge, right? I think to me, it seemed like a no-brainer, right? The value is there, whether it is, to raise capital, to creating liquidity is the biggest one. The biggest draw is creating liquidity. Raising capital, maybe it's a smarter way of doing it, right? But still, there's still a lot of people on the fence. And I know there is a lot of education that's needed. And that's why, I founded Token Expo to educate, right? To educate, the stakeholders, right? From your perspective, what's stopping these folks from, doing more?
Yeah, so you mentioned the biggest one, which is education and awareness, right? Just knowing the facts and understanding what is the potential and how does the technology work and why it would be a value proposition for them to do it. So the first is education. The second is definitely legal and regulatory framework. So you can literally take a flight, or forget that, get on a virtual call with somebody who is in this space in Dubai or Switzerland. Their attitudes, their questions, their way of approach, they think in world of possibilities. And you talk to somebody in United States or even parts of Europe, and they are just negative attitude on it. And I don't blame them. At the end, the regulatory framework and the sentiment has to change. And for that sentiment to change, we need clarity. Once that clarity is there, the underlying infrastructure has been there and it's becoming better to enable tokenization. And then a lot more asset holders will start being issuers of tokens. So these are the two main barriers in my mind. The third would be, you can call it visibility or market adoption, which will come once there is awareness, once the regulatory frameworks are clear, and then you can reach those potential investors and issuers to broaden the base, So think in terms of possibilities. Going back to the beginning of our conversation, a piece of land is our foundational asset for generational wealth or even personal wealth, right? Across generations, across centuries. We're talking about unlocking that value across the planet. How much of an economic boost would that be? Just picture that. We're talking about trillions of dollars worth of value being unlocked and business being done on the speed of light. Essentially, once it's digital, you can trade digital. So if you think of that vision, I'm sure you can see a number of possibilities. And that's where I would focus.
You've heard me talk about tokenization and blockchain at Token Expo. I believe education and training are vital for tech professionals to advance their careers and for leaders to build strong core teams needed to launch impactful Web3 ventures. Blockchain Strategy for Business Leaders is a comprehensive executive-level course with over 15 multidisciplinary modules. It is designed to help professionals cut through the blockchain jargon, uncover high-impact Web3 use cases, and confidently launch and lead blockchain products and ventures. Previously, this was exclusive to corporates. It's now available to you via this at your own pace video format. This course is designed with proprietary learning methodology Spark for creating rapid impact. Graduates report moving from confusion to clarity, learning actionable frameworks, discovering the right blockchain use cases, and building compelling business models. You can now launch your blockchain products in record time. One graduate recently said, "This course is more in-depth than any top business school courses." We have a special offer for being a Token Expo listener. Use the code Token Expo at the time of your enrollment and take $200 off. The enrollment link is in the description below. I wish you the very best. Earlier you had mentioned Dubai, right? And I think for them this is great because it is it is already a huge. I think real estate is a huge part of the Dubai's economy, the GDP, right? Contributed to GDP. But if you look at the Dubai example, many other countries, I think the huge disparity between advanced countries and developing and underdeveloped countries is their land laws are a complete mess, right? Even where, both of us, were born and raised in India, and we know land laws can be very challenging, and that's across, the subcontinent and many other countries. So I'm hoping that some of these, developing countries may also get their act together by adopting blockchain, and improving it. It may help leapfrog them right into the next.
Absolutely.
Right. So that there's a couple of other questions I have before we'll start wrapping up. But before I go there, since we're seeing a lot happening in the Middle East, I would love to see you do some courses for clients in the Middle East, and I've been reaching out to folks in my network. And hopefully, we'd love to see you launch some. You've done a few already, but we'd love to see you do, more of that, right? I have looked at your course, and it's so comprehensive. Covers, you've covered the whole enchilada, I would say, right? From an architecture perspective to how to get projects off the ground. It covers tokenization. It covers the fundamentals for the novices, as well as there is, there's modules for the more advanced. So we will talk offline about that. Now,
Sure.
The next thing I want to talk about was what role do you see DeFi, decentralized finance, playing the future of real estate tokenization? Right?
Yeah, that's even further exciting. So picking up from business at the speed of light, right? So if we can digitize the foundational asset and create primary and secondary marketplaces for issuance and trading, what comes next? I own this asset, whatever its value is determined by the market. Can I collateralize this asset? Let's say I own 1,000 tokens of the Eiffel Tower. And let's say, for example, they're just valued at $100 a piece. So that's the amount of asset I own based on the market value of this underlying token today, backed by a real physical asset. Can I collateralize that? Let's say I don't intend to sell it because I bought it not for the purpose of buying and selling or day trading. I bought it because I love history. Although personally, I may not do that for Eiffel Tower. I might do it for some other historical pieces, but just as a hypothetical example. I love history and I want to support the existence of this physical asset across centuries. Now, my interest is not to day trade. My interest is to just hold it. But when I'm holding it, can I collateralize it and get some value from that collateral? So I'm breaking it down in a very simplistic way, but essentially that could integrate well with DeFi, decentralized finance. So there could be marketplaces where I could collateralize it and I could get interest out of it just because I hold the asset, right? So that's just one example. But I think the integration of DeFi and tokenization of real estate and other assets, those are a marriage made in heaven. So, what it reminds me of, if you go back to how we proliferated cell phones, right? We all have one of these things in our hands. So it was integration of a few different technologies. It was the bandwidth from the networks, the fact that cameras and devices got smaller and smaller so they could fit in our hands, and the fact that we had now apps on these devices that could let us perform some utility. The marriage of these three, the confluence of these three different technologies is where the true transformation happened. So I think that is how I see DeFi and tokenization.
We will end with final question, Roop, is how do you envision the future to be, right? Like you said, my statement was very bold, where anybody could buy anywhere could buy a piece of real estate, right, of anywhere in the world. But yeah, what do you think that will the future look like for this asset class alone?
Yeah. So I love that vision, right? Anywhere anybody could buy any piece of real estate asset, right? That's a broad, beautiful vision. But I think we're far away from that today. So realistically speaking, what I see is different jurisdictions realizing the potential of this and really solving the politics aspect of this to figure out a clear, comprehensive, specific regulatory frameworks for security tokens, including real estate tokens. Once that happens, then it's a question of who owns the asset, are they willing to tokenize it, and where are the investors? And that goes hand in hand to create the market. So what I see happening is in those jurisdictions that are now fertile for this innovation to blossom, we will see a lot more projects coming up. And we will see a lot more attention, a lot more roadshows, a lot more investor conferences, which will embolden both issuers and investors and create faith in this innovation. So that's the way we're going. And you can already see that happening in certain jurisdictions, as we talked about, and not in some others.
I had said last, but will it be okay if I ask one other question?
Sure.
Yeah. Now, I asked for your advice as to what advice would you give the folks in the industry, in the real estate industry. As an extension to that, I have good friends who are running companies either as tokenization platforms or something connected to that, right? So from your perspective, do you have any advice for them, right? They are in the new, this is very similar to the early days of the internet, right? Who would have thought, in the mid to late 90s that you could have same day delivery and, so many things available online. You don't even have to go to a store, right? Where food is delivered and all of that, right? And the internet has enabled all of that. But, I have, couple of dozen folks who are, building, startups that are in the tokenization space, real estate being one of it, and many other real estate asset classes. So yeah, what word of advice would you provide them?
Yeah, so a few things. One would be to consider each of these asset classes in each country as a different market. Just because it works, something works in one market doesn't mean it's going to work in the other. So you got to do discovery in that set market. So marry the asset class, and I'm going beyond just real estate. That's even, you can take other asset classes like commodity or stocks or bonds or art and what have you, or oil futures, whatever the case is. And then marry that with the jurisdiction, and you have a certain phenomena. Adoption comes from that phenomena. So you got to study that. What happens a lot of times with technical teams and technical founders and technical providers is that they are focused highly on the technical aspect, which is their skill and their strength, and rightly so. But then when their technology is not adopted, they're confused. So their aim should be adoption. One of my statements is any technology sitting in a lab is not worth anything unless it is adopted. Only adopted technology is worth something, right? So I would focus on the market where you find adoption sooner and quicker so you can have product market fit. Right? At the end of the day, that's what really matters. And then we can talk about scaling. And you might have to go to jurisdictions that you haven't yet thought of because the ground is fertile for adoption there. So related to that, in the course, since you mentioned, we have a whole module on ecosystem development, and we study this as a science. So again, with a lot of technical companies, they don't consider who else needs to adopt their innovation for their product to be revenue positive. They need to create an ecosystem. And there is an art and a science to that. So once the platform is ready, technically speaking, it has the right architecture, it is scalable, you've tested it, you've done the pilots and the user studies, etc., etc. But what's next? Next is creating an ecosystem leading to adoption in a fertile market. That's what I will focus on.
Well, it was great chatting with you, Roop. We spoke about your course, so for our listeners, I appreciate you putting in a special offer, and we will, make the link available. If anyone's interested in your course, they can use the link to sign up or get more information. We'd love to continue doing these series, so I will talk to you offline around, for our next episode, what we will be covering. Always enjoy chatting with you. Always learn a lot when I, have these conversations, and look forward to our next episode in 2 or 3 weeks.
Yes, thank you so much, Tanveer. I've enjoyed our collaboration and these series. And as I said before, the work you're doing in creating awareness, in educating and bringing people together, creating an ecosystem, that is the most important work we need. Because what I've found that there is a lot of, you can call it chasm between different types of entities in this space, be it the technology providers, be it the startups, be it the large companies, be it the regulators. So what we need is platform like yours for them to come together and sort it out. And thank you for enabling that. And I think that's the best service one could do to this space for us to evolve.
That means a lot. And I do want to reiterate, from day one, we thought, everything we do at Token Expo is geared more towards the business audience, right? There's a lot of phenomenal technical events and hackathons that happen. Every ecosystem, whether from Ethereum to Solana and many others, right? They have a lot going on for the technical folks. I thought we will do stuff for the business audience. And it's been fun. So again, we'll look forward to our next conversation in a couple of weeks. You take care and enjoy your travels, and we'll talk offline soon.
Thank you so much for having me. It's been a pleasure.
It was a pleasure. Thank you so much.